For over 60 years, Warren Buffett, the famed CEO of Berkshire Hathaway, has dominated the investment world. His company's Class A shares have delivered a massive almost 5 million gain in percentage, solidifying his reputation as the Oracle of Omaha. Traditionally, Buffett focuses on established businesses with strong brands and reliable leadership. However, a surprising twist has emerged. 3 of Berkshire Hathaway's current holdings, totaling $159 billion within a $366 billion portfolio, are cutting-edge artificial intelligence stocks. This shift towards AI, a technology predicted to add trillions to global GDP by 2030, showcases Buffett's remarkable ability to evolve and capitalize on emerging trends, even in his late 80s. Let's explore these unexpected AI picks and delve deeper into how much of Berkshire Hathaway's vast portfolio is invested in this transformative technology. Apple. And the first one is Apple. But you might be thinking, hold on, Apple? Isn't that just iPhones and MacBooks? Well, yes, but there's more to the story. Apple surprisingly accounts for the biggest chunk of Buffett's AI holdings. Berkshire Hathaway has a massive $156.3 billion invested in Apple, a massive 42.8% of its total assets. That's more than 4 times the weighting of Bank of America, the second largest holding. Now, you might also be thinking, Apple isn't exactly the company building the nuts and bolts of AI technology like Nvidia. That's true, but here's the best part. AI solutions are built into the very fabric of Apple products and are crucial to their long-term growth strategy. Think about it. That autocorrect feature that saves countless typos on your iPhone? AI. The word suggestion that makes texting a breeze? AI again. Apple uses AI throughout its products to enhance the user experience. Looking ahead, their recently launched mixed reality Vision Pro headset utilizes eye and hand tracking technology powered by AI, further solidifying their commitment to this transformative field. But wait, there's more. Beyond AI, brand loyalty, management expertise, and sweet returns. It's important to understand that Buffett likely wasn't just captured by the AI factor when acquiring such a massive stake in Apple. One of the key attractions is Apple's unparalleled customer loyalty. The brand is a global powerhouse, easily identifiable as one of the most valuable in the world. Consumers, probably you too, eagerly anticipate the annual iPhone launch, solidifying Apple's dominant 50% or greater share of the US smartphone market. Buffett's confidence in Apple likely extends beyond just brand recognition. The company boasts a top-notch management team led by CEO Tim Cook. Under Cook's leadership, Apple has undergone a significant transformation, shifting focus from solely hardware to becoming more service-oriented. This emphasis on subscription services like Apple Music and iCloud storage promises to improve Apple's margins in the long run. Subscription models provide a steady stream of income, smoothing out the traditional sales fluctuations often associated with product upgraded cycles. Plus, they encourage consumers to remain entrenched within Apple's ecosystem of products and services, creating a loyal and recurring revenue base. And let's not forget the cherry on top, Apple's unmatched capital return program. In the past year alone, Apple returned a staggering $15 billion in dividends to its shareholders. That's like getting paid just for owning a piece of the company. Additionally, since 2013, Apple has repurchased a jaw-dropping $651 billion worth of its common stock. And yeah, it's clear by now, Berkshire Hathaway keeps getting a bigger slice of the Apple pie without even lifting a finger. Essentially, Apple is rewarding its shareholders with a steady stream of income while simultaneously boosting the value of its remaining shares. Talk about a win-win. While Apple represents the most significant AI holding within Berkshire Hathaway's portfolio, it's not the only one. If you dive even deeper, you'll be met by 2 additional companies with deep roots in artificial intelligence: Moody's Corporation, MCO, and Snowflake Incorporated, or Snow. A closer examination of these companies, along with Apple's strategic use of AI, provides valuable insights into Buffett's evolving investment philosophy and his willingness to embrace innovative technologies that hold the potential to reshape the future. But this is not the end. The Oracle of Omaha might have a few more surprises up his sleeve. Amazon. While Amazon holding represents a smaller portion of Berkshire Hathaway's portfolio, clocking in at $1.74 billion, or just 0.5% of invested assets, its presence reveals another intriguing facet of Buffett's evolving investment strategy. Here's why Amazon, the online shopping king we all know and love, has caught the eye of the legendary investor and how it ties into the whole AI revolution theme. Forget the endless rows of virtual shelves and next-day delivery for a second. Amazon, it turns out, is a hidden powerhouse powerhouse when it comes to artificial intelligence. They're utilizing AI in more ways than you can shake a Prime membership at. Think about all those product recommendations that appear in your cart after you browse a particular category. That's AI analyzing your shopping habits and suggesting related items you might be interested in. However, Amazon's AI influence goes far beyond personalized shopping experiences. Their cloud computing arm, the powerhouse known as Amazon Web Services or AWS, is where things get really interesting. AWS provides a platform for businesses of all sizes to build and deploy applications. And guess what? They're incorporating cutting-edge generative AI tools as part of the package. This allows companies to tailor advertisements and improve customer interactions with a level of precision and personalization that was unimaginable just a few years ago. Here's another wrinkle in the story. Most people wouldn't necessarily associate Amazon with hardware development. However, Amazon is actually in the process of creating its own graphics processing units or GPUs specifically designed for its data centers. Now, why would they do such a thing? GPUs are the workhorses that power a lot of AI applications. By developing their own, Amazon could potentially complement or even replace the GPUs currently dominating the market, like those from NVIDIA. This move hints at Amazon's long-term vision for AI and its desire to control a crucial piece of the technology puzzle. While everyone recognizes Amazon as the online retail giant, a lesser-known fact is that their true profit driver lies elsewhere. It's the company's ancillary operating segments, as some analysts call them, that do the heavy lifting when it comes to generating income. Arguably, the most important player in this arena is AWS. Think about it this way. In 2023, AWS accounted for a whopping 2/3 of Amazon's operating income, even though it only contributed around 1/6 of the company's total sales. That's a massive profit margin. With the cloud computing market still in its early stages of expansion, experts predict that AWS will have many years of double-digit sales growth ahead. As of September 2023, AWS is the leading cloud infrastructure service platform, holding a dominant 31% share of the global market. That's a powerful position to be in, and it's no wonder Buffett and his team took notice. From a purely financial standpoint, Amazon is looking pretty attractive right now. Shares are currently trading at a significant discount, over 40% lower than their average price-to-cash flow ratio over the past 5 years. While this might not be the textbook value stock Buffett has historically gravitated towards, it's certainly a situation that has piqued the interest of one or both of his top investment lieutenants, Ted Weschler or Todd Combs. These guys are known for their forward-thinking approach, and their involvement in the Amazon pick suggests they see the long-term potential unlocked by AI and the dominant position AWS holds in the cloud computing market. Snowflake. Now let's delve into the final piece of the puzzle. Snowflake, or Snow, the cloud data warehousing company nestled within Berkshire Hathaway's AI portfolio. This holding, representing a relatively small chunk of $951.5 million, or just 0.3% of invested assets, is another fascinating glimpse into Buffett's evolving investment philosophy. While Apple and Amazon are established giants, Snowflake is a young, disruptive player with a unique angle on the AI revolution. Snowflake first truly captured the attention of AI-focused investors last summer. They announced a strategic collaboration with none other than NVIDIA, the undisputed leader in graphics processing units and GPUs. Remember those specialized chips we mentioned earlier that are crucial for many AI applications? That's NVIDIA's bread and butter. This partnership is a game changer for Snowflake. It allows its customers to tap into the immense processing power of NVIDIA's GPUs directly through Snowflake's cloud platform. Imagine having access to that kind of raw computational muscle without needing to build and maintain your own expensive data centers, a dream scenario for businesses of all sizes working with complex AI models. But the NVIDIA partnership isn't the only trick Snowflake has up its sleeve. They're also making cutting-edge generative AI solutions readily available to their customers. These tools streamline the process of training, customizing, and deploying their large language models, or LLMs. Think of LLMs as the brains behind some of the most advanced chatbots and virtual assistants we interact with today. By offering these tools, Snowflake is empowering companies to leverage the power of AI to analyze massive datasets, automate tasks, and gain deeper customer insights. So what exactly has made Snowflake such a darling of the investment world, especially among those focused on AI? Several key factors contribute to their appeal. One major lies in their seamless data sharing capabilities. Many competing cloud infrastructure service platforms create silos where information exchange becomes a headache. Snowflake, on the other hand, built its platforms to be agnostic to the underlying cloud provider. This means Snowflake users can easily share and transfer data without getting bogged down in capability issues. A huge win for businesses operating in complex multi-cloud environments. Another area where Snowflake shines is its transparent pricing policy. Forget the confusing subscription models many of their competitors rely on. Snowflake keeps things simple by charging users based on two key metrics: the amount of data they store and the Snowflake compute credits they utilize. This approach provides a level of cost predictability that businesses appreciate, especially in today's uncertain economic environment. However, there's a wrinkle in the Snowflake story: its valuation. While the aforementioned competitive advantages are undeniable, justifying Snowflake's sky-high price tag has been a challenge. Gone are the days of triple-digit sales growth that initially drew investors in droves. With economic concerns casting a shadow over the business landscape, analysts forecast Snowflake's annual sales growth to slow down significantly, hovering around 22% for the current fiscal year. Trading at a staggering multiple of over 160 times estimated earnings per share, some investors might be wise to take a cautious approach and allow Snowflake to mature and grow into its current valuation. The company is still young, and its long-term potential within the AI landscape remains promising. However, for the time being, the sky-high price tag might be a pill too bitter to swallow for some risk-averse investors. So, the picture becomes clear. Berkshire Hathaway's foray into AI isn't limited to established tech giants like Apple or e-commerce juggernauts like Amazon. With the inclusion of Snowflake, Buffett and his team are demonstrating a willingness to embrace innovative, young companies at the forefront of disruptive technologies. While Snowflake's valuation might raise eyebrows, their partnership with NVIDIA, which focuses on generative AI and a unique cloud-agnostic platform, positions them to be a significant player in the AI revolution.